South Korea's rise is nothing short of extraordinary. After the Korean War in the 1950s, the country was one of the poorest in the world. Today, it stands as the 10th largest economy globally. This transformation was powered by major conglomerates like Samsung, Hyundai, and LG, turning the nation into a leader in technology, automobiles, and shipbuilding. But this remarkable growth story is now at risk. South Korea's economy is facing deep structural issues that could cause serious long-term problems. From falling exports and rising debt to a looming demographic crisis, let's dive into the key reasons why South Korea's economy is in deep trouble and what this could mean for the future. South Korea's economy is heavily dependent on exports. These account for nearly 40% of the country's GDP. Electronics, cars, semiconductors, and petrochemical products are shipped across the world, making South Korea a vital player in global trade. In fact, South Korea is the world's largest producer of memory chips and one of the top automobile exporters. But recently, exports have been shrinking. The year 2023 saw a steep decline of over 10% in South Korea's exports, a worrying trend for an economy so reliant on selling goods abroad. The biggest factor? A drop in demand from China, South Korea's largest trading partner, which accounts for about a quarter of all exports. China is going through its own economic struggles, including a massive slowdown in manufacturing and weak consumer demand. This has had a ripple effect across Asia, but especially for South Korea, which relies heavily on China for semiconductor sales, machinery, and automobile. But it's not just China. The global demand for electronics, particularly semiconductors, has been falling as major markets like the US and Europe face rising inflation and higher interest rates. South Korean companies, including giants like Samsung and SK Hynix, are feeling the pinch, with semiconductor exports plunging by nearly 30%. And this matters because semiconductors make up around 20% of South Korea's exports. When these exports decline, it sends shockwaves throughout the entire economy, leading to job cuts, reduced investment, and slower growth overall. Moreover, global trade tensions, like the US-China trade war and disruptions in global supply chains due to COVID-19 and the war in Ukraine, have further strained South Korea's export-driven economy. With shrinking demand, South Korea's trade-dependent economy is facing a major challenge. And if this trend continues, it could have serious consequences for businesses, jobs, and future growth. Rising household debt. The next big issue? Household debt. South Korean households are some of the most indebted in the world. Over the past 2 decades, as property prices have skyrocketed and families have taken on more loans, household debt has ballooned to over 105% of the country's GDP. Much of this debt comes from borrowing to buy homes. South Korea has one of the world's most expensive real estate markets, especially in cities like Seoul, where the average apartment costs more than 14 times the average household income. To afford these high property prices, many South Koreans have taken out large loans. Mortgage debt has skyrocketed, and with interest rates rising, many households are now struggling to make their monthly payments. Interest rates are a critical factor here. To combat inflation, the Bank of Korea has raised interest rates multiple times in the past year. But higher interest rates mean that people with mortgages and other loans are now paying much more in monthly payments. This is creating a dangerous situation where families are taking on too much debt, with very little room to manage if the economy slows further. Concern is that if enough households default on their loans, it could trigger a banking crisis, leading to further financial instability. Already, consumer spending has slowed down because households are devoting more of their income to paying off debt rather than spending it on goods and services. And this isn't just a family issue. Reduced consumer spending has a domino effect on the entire economy. With less money being spent in stores, businesses suffer, jobs are cut, and the cycle of economic slowdown continues. South Korea is also facing a serious demographic crisis. Population is aging rapidly, and the birth rate is plummeting. In fact, South Korea has the lowest birth rate in the world, at just 0.78 children per woman in 2022, far below the replacement level of 2.1. This trend continues, South Korea's population could shrink by nearly half by the year 2100. This creates a significant challenge. With fewer young people entering the workforce, economic growth will slow. There will be fewer workers to support the growing elderly population, and the strain on government resources will increase dramatically. As the population ages, the government will need to spend more on healthcare and pensions. In fact, it's estimated that by 2050, South Korea's public spending on elderly care could triple, placing a massive burden on the economy. At the same time, the shrinking workforce means less tax revenue, which will make it harder for the government to fund these services. This creates a dangerous cycle where the economy slows down, tax revenues fall, and the government struggles to meet its financial obligations. The South Korean government has tried to address this issue by offering incentives for families to have more children, like subsidies for childcare, education, and housing, but these measures have so far had little impact. Cultural factors, such as long working hours, expensive living costs, and a highly competitive education system, are making it difficult for people to raise families. This demographic time bomb could lead to long-term stagnation, fewer people in the workforce, less innovation, and a declining economic output. Real estate has long been seen as a safe and lucrative investment in South Korea. But this has created a housing market where property prices have soared to unsustainable levels, especially in cities like Seoul. The average apartment in Seoul now costs more than $1 million, making homeownership a distant dream for many young South Koreans. And despite efforts by the government to cool the market through taxes and regulations, prices remain sky-high. Problem is that this rapid rise in prices has created a bubble. Many people have taken out massive loans to buy homes, betting that prices will keep rising. But as the economy slows, demand for housing is falling, and this bubble could burst any time. A collapse in the real estate market would have serious consequences. Could lead to widespread defaults on loans, with banks suffering massive losses and homeowners finding themselves in negative equity, owing more on their mortgages than their homes are worth. Many construction companies are already feeling the strain, with projects being delayed or abandoned due to rising costs and slowing demand. Full-blown housing market crash could ripple across the entire economy, leading to financial instability, economic recession. And if these domestic issues weren't enough, South Korea is also dealing with growing global uncertainty. The world economy is going through turbulent times, geopolitical tensions, trade disputes, and supply chain disruptions, all making life difficult for an export-driven economy like South Korea's. The US-China trade war, for example, has hit South Korean companies hard. Many South Korean firms rely on both the US and China for their business, selling products to one country while sourcing components from the other. But as the tech war between the US and China intensifies, South Korean companies are finding themselves caught in the middle. For example, Samsung, one of South Korea's largest companies, is heavily reliant on Chinese factories for its supply chain. But with rising tariffs, technology bans, and supply chain disruptions, these companies are now facing higher costs and lower profits. The global supply chain crisis, worsened by the COVID-19 pandemic and the war in Ukraine, has only added to the uncertainty. Raw materials are more expensive, shipping delays are longer, and global demand is shaky at best. All of this uncertainty makes it difficult for South Korea to navigate the global economy. As a country that relies on exporting goods, any slowdown in global trade or rising geopolitical tensions can have serious repercussions. What's next for South Korea? So, what's the solution? The South Korean government has been taking action to address these issues. Over the past few years, they've introduced stimulus packages, implemented measures to cool the housing market, and worked on policies to encourage more innovation in the tech sector. There's hope that with the right mix of policy changes, South Korea can bounce back. Initiatives to promote green energy, advanced technology, and digital transformation are promising signs that the economy could pivot towards new growth sectors. In addition, the South Korean government is looking at diversifying its trade partners to reduce reliance on China. while also focusing on building a more self-sufficient domestic economy. The country has faced challenges before, from the devastation of the Korean War to the 1997 Asian financial crisis, and each time it found a way to recover and thrive. But can South Korea overcome these current challenges, or are they too deep-rooted for a quick fix? What do you think? Will South Korea emerge stronger from this crisis, or will the economic troubles deepen? Let us know your thoughts in the comments below.